The novel coronavirus is causing some not so novel, yet the quite so serious nauseating impact on the stock markets and economies across the world. Investors are losing confidence, stock markets are plunging, companies are running low on working capital, and production has taken a hit. The global economy braces itself for further losses as the pandemic spreads further. According to some estimates, the world might even shave off around $1 trillion this year. How pandemics impact stock markets? While past rebounds are insufficient to predict what will happen now, it surely gives insights on effective measures for a speedy recovery. In the last 40 years, the world overcame several viral outbreaks that included relatively recent SARS, avian flu, and swine flu. The very first economic repercussions of a pandemic is the dramatic lows stock markets hit as the investors panic. But in all the cases, the stock markets did bounce back after a correction. Within 6 months of the swine flu outbreak in early 2009, the S&P 500 rose 18.72% and was up by 35.96% by the end of the year. Impact of COVID-19 on stocks? The coronavirus outbreak has severely impacted stock markets across the globe. Some of the stock exchanges experience historic low. Even after the governments committed billions of dollars to fight the coronavirus, stock markets are unable to arrest the sell-offs. The Philippines became the first country to shut its financial markets and stop trading. In a bear market, the ability to raise money becomes a challenge for companies looking to invest. What it means for India? As the number of coronavirus cases increases in India, the economic impact of the pandemic hit close to home. Portfolio and institutional investors also pulled out their money as brokerages tried to sway the frayed nerves. The rupee suffered further with respect to dollar despite the RBI coming out with a rupee-dollar swap window. With LIC, the largest investor in the stock market, also fighting a rising NPA, the government has little room for any maneuverability. The government's ambitious target to raise more than Rs 1 lakh crore throughout disinvestments by selling BPCL and other PSUs is likely to face stumbling block. Is this the right time to invest? Since the virus shows no let-up, the time frame for a recovery cannot be predicted. But the crash has actually brought down prices of several blue chips within the reach of retail investors. Further, the rate cuts will definitely lead to small saving schemes giving less returns, and hence buying companies with solid fundamentals and long-term prospect does make a sense. The only thing investors should be worried about is not to guess any bottoming out to wait for an investment.